Do you have any insights into the sort of the two main ways, two main purchase structures? One of them is company share purchase, and so buying the shares in the company and potential whitewash requirements. So that's
Yep.
kind of one option, versus a going concern purchase.
Yeah, well, in regards to the shares in the business, so if you're buying shares in the business, then yeah, there is whitewash provisions, which it's a section in the Corporations Act that we need to be aware of when buying shares in the business, and it can particularly be triggered if the business is then providing a guarantee back to those owners to link in the income from that business. So it's something we need to be careful of. The banks. Us as finance brokers will engage with accountants and the bank's internal lawyers to make sure that process is completed correctly and doesn't leave anyone exposed to any sort of breaches of the Corporations Act. So that is certainly one instance where someone will just come in and basically buy the owner's shares in that business and continue to trade that business. Other instances is where you come in and particularly you buy the business, you buy the brand, you may even change the brand of the business into and roll that up into your own business. So again, that probably comes down to a conversation with your accountant as to the most appropriate structure for you in terms of funding that business. I suppose what I'll say there is, regardless of the structure that you do decide to proceed with, whether you're going to buy shares, whether you're going to buy the business as a going concern, and whether you're going to structure that as a company or a trust or a sole trader, as long as the banks can understand that structure and how that's going to work, identifying any potential implications around whitewash provisions and things like that, the bank's generally going to be able to work with that structure to provide a finance arrangement. It may then just vary some of the information that needs to be provided and also the way the security is structured, because of you don't get a director's guarantee, for instance, if it's a sole trader who is buying the business. The sole trader is automatically liable. So those sort of things will need to be understood and confirmed when we present something to the bank.
Okay, so structure is typically, like, I mean, that is very, very relevant for every party: the lawyers, the accountants, the bank, the owner. There's so many interesting things involved there. So yeah, that's, well, I guess, complex.
Well, it is, and I suppose that's where we would defer to yourself, Ben, there in terms of working with the customer as to the most effective structure for running that business. And these are conversations you would have in terms of where that business is going, if there's going to be future parties buying into the business, if there's going to be more acquisitions, personal tax positions. Those sort of things will all come into consideration when setting up what sort of structure you're going to go with when you buy that business.